We can go ahead and jump into the newsletter breakdown. So Blake's not with us this week. He's out, but he still did write his section for the newsletter. So I'll go over the high level stuff for the macro. We're less than 2 weeks away from the September Fed meeting, and it's looking like the futures market has it priced as a 75 basis point increase. I think Goldman Sachs also is predicting a 75 basis point increase. So that's higher than the 50 that was initially expected. So they seem to be holding by their guns. The Fed's just going to keep hiking until inflation gets under control. The major equity indexes saw a solid bounce today, along with Bitcoin, but primary trend has been down, and we're likely in the midst of a third leg down. The 2 to 10 year spread is still negative at minus 20 basis points, and it's recovered fairly significantly since August, but it's still at its lowest since 2000. So that's just another thing to keep an eye on. The bond market doesn't lie. Bitcoin, everybody, you probably know it jumped up to about 21,000 this morning. It found support around 18.6 at the time of writing, but it is a good morning today, but it's still below the realized price and 4 year moving average, which leads me into the on-chain section. And I'll go ahead and pin my thread up there to the nest. You can see the charts. Yeah, so 10% pump this morning, but it's really, it's exciting, but it's not much unless we can get back above the 4 year moving average and or the realized price. So unless that happens, short term outlook is pretty crabbish / bearish. Long term holder realized price and short term holder realized price are within 1,400 of each other. So, short term holders, they bought the top last year, but they've been buying down the whole way. Long term holders, they bought a long time ago. So obviously they had a really low cost basis, but they keep buying, so their cost base increases. And eventually what we see every bear market is these two metrics intersect. And when the short term holder realized price is less than the long term holder realized price, like that is the time to be stacking hard, because it doesn't happen often, but when it does, those sats are the best value you can get. The Puell multiple measures the daily issuance value of Bitcoin relative to the 365-day moving average of the daily issuance, and that's back in the buy zone. So again, just long term, we're in the bottom of the cycle right here. If history tells us anything, and it'll be curious to see if the Puell multiple gets down as low as it did in the other bear markets. It didn't go as high this past bull run. Everyone was expecting a blow off top into the 100, 200,000 range, but we didn't quite get that. So it sort of leads people to believe that, this cycle is a bit different, and we can't exactly expect this cycle to behave exactly the same way as past cycles. When we look at market cap to thermocap ratio, this sort of measures miner profitability. So it's at really low levels right now, not quite in the super value range that it has reached before. So that's sort of you can have an hypothesis that will go a little bit lower based off that metric and based off the Puell multiple. And this one, again, it didn't really blow off this past bull run. So it wasn't as intense as we expected. And the cycles could be weakening in their intensity, but only time will tell on that. The market, when you look at the market cap to thermocap ratio, though, and you see miners like barely profitable, but the difficulty's still going up. So, like, if you don't think Bitcoin's secure, then, and I don't know what to tell you, because even when miners are barely making the slimmest margins, people are still trying to mine more. Difficulty still going back up. People want to get online and hash. It's quite the sight to see. And also one more thing. This tweet isn't in the thread, but we are about 300 days since the last all-time high, and most of the bottom of the bear markets occur around the 1 year mark following the previous all-time high. So that would put, if you had to time it, that would put the bottom around November, December of this year, and we'll see if that happens. So that's sort of my thesis is that we're going to crab in this range for the rest of the year, possibly go lower, but I really don't see that. Anybody, Joe and I were talking about this before a lot of people got in here. Anybody who would have sold Bitcoin would have sold like 3 months ago, because we've been in this range. Like nobody's selling now. All the people that are left, they're in it for a while. So we could, again, on that chart, it's in the newsletter, but it's not in the thread. It's Bitcoin price plus the days since the all-time high. It usually takes about 3 years from one all-time high to get back to that level. So just mentally prepare yourself. If you bought the top at 69K, we might not see that for another 2 years. And that's great. If you've done your research and you've learned about Bitcoin, then you've got a long time to lower your cost basis and buy cheaper sats relatively. So just keep stacking and lower your time preference. And this is the time. Everybody in normie lands forgot about Bitcoin. So now's when you need to be stacking.
Yeah, Mitch, I think you made some pretty fantastic points. I really like the chart that you were talking about that's in the newsletter, basically just showing the days since Bitcoin has last hit an all-time high. I've heard Checkmate, who's the lead analyst at Glassnode, mention how he kind of thinks that in some way the real all-time high for Bitcoin, or you know, it was all-time high at the time, but early 2021, spring 2021, when Bitcoin first hit 50, 60,000, maybe that should be potentially treated as our all-time high. And maybe, yes, we did end up setting slightly higher all-time high in November of 2021, but he described it even from like an on-chain perspective, like there wasn't much euphoria then. It was kind of just quote unquote bear market rally with high inflation. Do you buy into that idea at all, or do you think that the true all-time high was late 2021?
I kind of agree with you. I think, personally, I got in late 2020, early 2021. I just remember anecdotally that spring, like everybody was talking about Bitcoin. You had your Elon, Doge, whatever. That did seem like the peak of Bitcoin, like being in the culture and immersed there. And then when Elon flipped, Bitcoin's market cap is still relatively low to where it's going to be. And that dude, everybody was sort of got into Bitcoin, like from more normie land. They were like looking at what he says. So when he was like, oh, Bitcoin's bad for the environment, blah, blah, blah. And the price sort of, that hype cycle stopped. And then the Chinese miner ban, that sort of also put an end to that hype cycle. But I kind of do agree with that. November, it didn't seem as intense as it probably should have. Definitely the May hype cycle definitely felt more like the bull run in my opinion. But then this is only my first bull run, so I don't really have as much anecdotal experience going back to other bull runs, but it did seem like that to me. And yeah, I guess if that whole Elon thing didn't happen, maybe it would have just kept going all the way from the spring through the fall, and that would have been the blow off top everybody was looking for. But that sort of put the brakes on it, so to say.
Yeah, exactly. I mean, when you look back at, the log chart of Bitcoin and you analyze, the 2011 bull run, the 2013, and that was kind of a double bull run. Then obviously the 2017 bull run, they all ended with this, massive blow off top. And just ironically, we didn't really see that this time. Like we kind of, like you're saying, we kind of had this, blow off, somewhat of a blow off top in 2021, early 2021, but the price just kind of grinded sideways. Yes, we had like the China miner ban, which definitely, like in my opinion, slowed things down. Probably miners are an integral part of Bitcoin. They obviously hold a lot of Bitcoin, and when they're under serious pressure, they're going to be selling some Bitcoin. So yeah, maybe we would have had the real blow off top mid 2021 without Elon, without China mining ban, but it's just fascinating that we just saw Bitcoin just slowly move, sideways for such a long time. And to me, I think that's kind of more interesting because blow off tops to me are kind of a sign that, hey, like the price has gotten way overextended from where it's actually sustainable at. And, by moving sideways, it kind of proved that, hey, Bitcoin can sustain this day-to-day sell pressure from miners that are currently on the network. And, maybe it's kind of a sign that this bear market is not going to go as deep as from the all-time high as past bear markets, just because we never had that crazy high price that was just completely unsustainable.
Yeah, I agree totally, and I love the sideways price action. It shows like Bitcoin people. A lot of the main FUD is like, oh, it's too volatile, but it's literally been in the 20K range for like quite a few months now. If this thing's not going to zero, like Sailor says, it's either going to zero or it's going to 10 million, and obviously it's not going to zero because there's too strong of a support base now. Like everybody would buy it if it went below like 10,000 or if it went below 1,000. Like there's no world in which people aren't putting buy pressure on that. And I think all we need to do is just wait 2 more years, and once the halving happens, the sell pressure from miners is literally gonna be cut in half. And I don't know. I think things will be great in 2024, 2025. So just hold on tight until then. And while I'm thinking about it, you had Foss on last week, and he did the math, and the United States government cannot pay off the interest on their debt when the Fed funds rate keeps getting raised. They're talking about doing another 75 basis point hike this month, 50 in November. Just the interest payments on the 30 trillion outstanding debt alone, that they will have to pivot at some point. They can keep raising for now. It's just sort of kicking the can down the road of what they're going to have to do. They're just right now they're trying to kill demand to get CPI down, so it looks like the market's better. But eventually, quantitative easing is the only way out. Fiat currency has dug such a deep hole that they just have to print more money to get out of the debt. So in about 2 years, we'll see them turn the money printer back on, and the Bitcoin halving will happen. And if you thought 2020 that bull run was crazy, then be ready for 2024. That's going to be something.
Definitely. I mean, a debt-based monetary system is just inherently, unstable and fragile. And I think you're right, where we're going to continue, with all assets, whether it's U.S. equities or Bitcoin, they're going to continue going through these cycles, where there's large bull runs, and then there's capitulation type bear market events like we're seeing now. But with that said, I think in the long term, if you have a low time preference and you're willing to withstand that volatility, and your balance sheet and your income is well positioned to withstand any extreme volatility, then you're eventually going to make it out on the good side of things. And I think Bitcoin's one of the best assets that you can hold to really capitalize when the money printer turns back on. But I'll go ahead and continue from an on-chain perspective that we're doing in the newsletter, or that we published in the newsletter, and I'll also talk about mining once I finish on-chain. So there's two quick topics that are related in the on-chain section. One is this chart, which shows the revived supply last active 1+ years ago. So this is basically Bitcoins that haven't moved in over a year are becoming more active, and this is the 90-day moving average of this metric. And you can see on the chart in the newsletter.
Joe, did you cut out, or was that me?
2011. Sorry, can you hear me now?
Yeah. I don't know if that was you or me, so it might have
No,
been me. So
yeah,
carry on.
my I think I connected to some Bluetooth in my apartment, so we should be good now. But just going back to what I was saying, the chart in the newsletter about supply that moved um, recently, but it was last active over a year ago. When this occurs, supply is typically moving to an extreme. You just pinned it nice. For euphoria or capitulation. Euphoria coincides exactly with, or for the most part, very in line with price tops, whether it's 2011, 2013, 2014, 2017, and even 2021. But it also supply is fairly active when there's capitulation, when price is reaching its low, when the only people remaining in Bitcoin that can't handle that low price, they sell, and the rest of the, users of the Bitcoin network are probably the strongest hands that exist. So we saw these capitulation type movements in 2015, saw it in late 2018, early 2019. And then we've also kind of seen a capitulation recently this summer. So that's an interesting chart that I've been looking at. And again, it using the HODL waves chart, which is also in the newsletter, you can just clearly see these long-term cycles playing out where a lot of coins kind of get active near price tops, and at price bottoms, a lot of coins are just, simply not moving. This is when, the bottoms are made, the strongest hands remain in the Bitcoin network, and the smallest catalyst, the smallest spark is what ignites the next bull run. And as we know in Bitcoin, when the price starts moving, that in itself reflexively drives more adoption. And it kind of becomes this massive feedback loop until the price gets bid up way too far and we have another crazy bear market. But I think HODL waves are a fascinating, metric to really visualize Bitcoin price cycles. For Bitcoin mining,
Joe, real quick before you go on the revived supply chart, I was wondering, do you think the capitulation, especially this year, probably I think 2020 that capitulation was just genuine market fear because nobody really knew where the world was headed. But for this year, do you think the supply moving that hasn't been active for a year, do you think that was miners being forced to sell to cover like if they were over leveraged? Because I can't imagine anybody holding Bitcoin for 1 year and selling down here unless they absolutely had to. So do you think that was forced selling from miners?
Yeah, that's a great point. I mean, all throughout, late 2020 and early 2021, miners were in this race to basically use as much debt and issue as much equity as possible to hold all of the Bitcoin that they were mining, right? And now they were obviously kind of doing that at the exact wrong time. But the public markets and private markets were rewarding miners for doing that because people wanted to get Bitcoin exposure. They didn't necessarily want to buy GPTC at a huge premium. Maybe they weren't comfortable holding their own private keys, or there wasn't a trusted institution where they were willing to purchase actual Bitcoin from. So they would, get exposure to Bitcoin by buying Bitcoin miners. And, the equity of these public and private miners was bid up significantly. So they were incentivized to issue more equity and get more hash rate, because that was basically somewhat of an arbitrage opportunity to where more hash rate, a dollar's worth of more hash rate may lead for their stock price to go up $2. So there's kind of a feedback loop that forced them to really overgrow what they probably should have been doing, and also forced them to, or encouraged and incentivized them to be more aggressive in holding all of the Bitcoin that they mined instead of actually trying to, hedge like a normal commodity producer. But yeah, and summer of this year, we saw a miner capitulation. We saw hash rate drop. We saw public miners selling significantly more Bitcoin than they were mining, which means exactly like you said, they were selling Bitcoin from their Bitcoin treasury that potentially hasn't moved in over a year. I don't think it was entirely from miners, but I definitely think as price goes lower, like it did, and we do see capitulations like this, it's just holders that are just getting shaken out, and it's in the long term it's healthy. In the short term, obviously, it can create some nasty moves down.
Yeah, that was great there, Joe. And I think everybody in this space listening, you're still here, you're still listening to a Bitcoin Twitter space on your Friday afternoon. So I assume all of you have the strong hands, and kudos to you. Sort of just take a look around and remember the people who are still in it now, because anybody who's here now, they really understand Bitcoin, and we know where this thing is going. So shout out to all you guys down there.
Yeah. And last, we'll get into the mining section of the newsletter. One of the big, things that happened this week in the mining industry, particularly, was the White House Climate and Energy Report. It was basically 46 pages of research ideas and honestly like mixed signals. It went from varying to explaining like how Bitcoin mining can be, powered by stranded methane and you know, and encouraging renewables to be built out to mine Bitcoin. But it also went from that to, Bitcoin mining encourages greenhouse gas emissions and other bad environmental impacts. And my thought was, it's very ironic that electric cars are subsidized, but electric money is not. And I think, whether Bitcoin is good or bad for the environment, and those are both in quotes, I think that literally depends on like the subjective thoughts of a specific unique individual's perspective. And I think like, yes, while Bitcoin miners will like, and they are reducing greenhouse gas emissions, whether it's stranded methane or in other ways, and Bitcoin miners do, in my opinion, also incentivize the production of new renewable energy. I think there's really a bigger, more important topic, and it's the idea that producing and using energy is not bad. Like humans thrive on energy. It's how like our economic systems scale. Yes, Bitcoin consumes a lot of energy, and I personally think it's likely going to consume multiples more. This is not a problem. It's just the free market balancing energy production and economic savings. For example, if energy is scarce, energy producers will be selling a highly valuable product for just normal economic activity. And if energy is abundant, Bitcoin, which is just monetary savings, will be highly valuable, and producers of energy can literally convert their energy into money. And this is obviously Bitcoin mining. So after reading the report, I just hope more people can understand that Bitcoin mining is good for civilization, it's good for the economy, and it's good for Earth. Like even if the White House does attempt to slow hash rate growth in the U.S., which in my opinion, I think it still seems unlikely, it will only incentivize new mining facilities to be built in other countries all around the world. And it kind of does nothing for their stated, climate change objectives, whether, Bitcoin mining is good or bad for climate change. Because I think that, the message or the understanding of if it's good or bad is still, highly debatable. So I think really my message would be to the U.S., the White House, the rational response is really to embrace Bitcoin mining as much as possible, bring hash rate to the U.S., bring those dollars here and bring that investment here. And I think that's, critical for, the future of the United States, and it will help Bitcoin as well, ease the transition to a Bitcoin standard. Other than that, talked a little bit about mining rig price history. So we actually posted this on the Blockware account this morning as well. And, this was mentioned in the White House report. A lot of investors, I think, still view Bitcoin mining rigs as equipment that basically like depreciates into worthless e-waste. And it's interesting looking back at actual historical price data for an old gen Bitcoin mining machine, an S9, which was a ant miner from Bitmain. That machine actually from May of 2020 to even end of August end of August 2022, it basically maintained its value in Bitcoin terms. Like it was worth about 0.005 BTC. It's worth about the same, or it was worth about the same at the end of August. And dollar wise, the machine obviously went up a lot because from May of 2020 to the summer of this year, Bitcoin has gone up in value. So these machines, I think a lot of people don't understand that they don't just like depreciate and disappear. These machines, can be run at, still cheap electricity costs, and they still have a market value. Last thing that I want to cover is something called hash price, which is a common metric that Bitcoin miners are using or have been using to basically judge how much revenue their fleet of mining rigs are generating. And so hash price shows how much a machine earns per day per terahash. So for example, if a machine runs at 100 terahash and the current hash price is 8 cents, the machine will generate about $8 of Bitcoin per day. With the recent drop in Bitcoin price over the last, few months to around, 20K, and the very recent plus 9% difficulty adjustment, hash price has actually made new lows that we haven't seen since October of 2020. So this drop in hash prices really compressed margins for many Bitcoin miners, and it's part of the reason that we've had this miner capitulation that started at the beginning of this summer.
That was great, Joe. That was a lot of good information there. Yeah, it's great to see. My difficulty still went up 9%, even though miner profitability is super low. People find a way to get their machines online. The most efficient miners are going to be the ones that survive these tough drawdowns. So the Bitcoin network's just rewarding people who can efficiently allocate resources, and in this case, it's energy and computing power. And it's really great to see the network going up in security, even though the revenue is currently at a low point. And mining is just sort of a race, like, right? Do you think price is going to go up faster than difficulty? And can you get online before difficulty goes up? Because when price goes up, difficulty will inevitably go up. So mining's just a great, really fascinating industry that a lot of the world doesn't seem to fully understand yet.
Yeah, certainly. And we're living in a unique period where we're going to look back in 20 years and realize, wow, the block subsidy was 6.25 Bitcoin, just like we look back on the early days of Bitcoin when the block subsidy was 50 Bitcoin every 10 minutes. So it's crazy to live during the actual distribution of Bitcoins themselves. And it's a crazy time to experience the actual monetization of Bitcoin, the asset.
Yeah, dude, that is crazy because 10, 20, 30 years from now, 6.25 Bitcoin is going to be generational wealth. And people are going to look back on this time like, dang, that there was a chance to get that every 10 minutes. And yeah, that is weird to think about, because when I think about 50 Bitcoin for the block reward, that's just, it's hard to comprehend.
Definitely. Well, enjoyed. I think this is a fantastic conversation, and I know we're gonna upload it to YouTube if anyone was late.
Yeah, I agree. It was a good talk, Joe. Thank you, everybody, for listening. This will be up on YouTube relatively soon. So, thank you guys for listening. Keep holding, keep mining, and we'll see you guys next week. Make sure to check out the newsletter. We tweeted it from the Blockware account, or we will here in a second when we close down the space. So, give it a read. Show up in your inbox every Friday. See you guys.
Yep. Thanks, Mitch, and see you, everybody.